If you guys give me just 10 minutes of your time, I'm going to be able to help you improve your entries, which will also improve your win rate and your R multiple simultaneously. Now, the problem with growing a small account is that most people tend to just take entries and not really understand where they have a valid stop loss placement. And on top of that, the stop losses are really huge. So I'm not even telling you what you're going to need to do is completely change your trading strategy. What I'm going to tell you is I'm going to give you a lot more of a accurate system to actually enter the market off of. And what that'll do is make you more accurate with your entries. It'll lower the size of your stops and giving you the more confidence to actually take that trade as well. And then it'll also increase your reward at the same exact time. So now what exactly am I going to be talking about? But before I actually even talk about it, you know what I'm going to do instead is I'm going to show you a live example. So in this situation, this is going to be ES on the 5-minute time frame here. If we pay attention to 64.85, this is going to be a key level based off of an hour time frame. We can see we formed structure and held as resistance, 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 and we even broke above, faked out that area and started to reclaim above, and look at how much volume and volatility came into this market and pushed this market up. Now with this previous candlestick closure, most people would be looking to take this long, whether they're going to wait for some form of a pullback to continue to take this long, or even just buy the breakout itself at the very high. For me, I'm going to be looking to actually short this market. Now, why am I actually going to be looking to short this market? It is super simple. It is because of the footprint chart. So before looking at the actual footprint chart itself, this is kind of like the result of the trade and how it played out. So even most people wouldn't have been able to take advantage of this short setup unless they just put a random stop loss in a random place and took a random entry. Most people probably would have taken this short here after waiting for the engulfing close and a little bit of a pullback. So let's just say you would have taken the shorts here. For a stop loss to be valid in this area, you would have to put your entry above the high, giving you a 0.67 R multiple if you're going to target the day's low, which you're trading at a negative R multiple. Even if you would have targeted this next support range, you're only going to get a 1.6 R multiple out of this trade max. Now for me, I'm going to be looking at enter short near the top here. Now why? Like I said previously, it's all going to come down to the footprint chart. So this is going to be that same exact high here on the footprint chart. That's exactly what this looks like right here. So this is going to be that same exact high. And what we can see at this high on this footprint chart is absorption. Now, before I get a little bit more in depth with the entry and how you could have taken advantage of this, what I want you guys to know is that this is going to be a delta footprint chart. Now, I'm not telling you guys you need to change your trading strategy. You don't. But if you implement using a delta footprint chart, what that's going to do for you, it's going to allow you to actually confirm strength in the markets by looking at imbalances. It's going to allow you to confirm potential reversals by identifying absorption. And it's also going to tell you the aggressor and who is in control of that market. So it doesn't matter if you trade support and resistance, supply and demand, moving averages, ICT, SMC, it literally does not matter. But by implementing this one simple tool alone, you're going to be able to significantly increase the size of your take profits, decrease your stops, and increase your win rate at the same exact time. Now, how do we actually read this chart? Well, first and foremost, we have to understand the basics of the market and the market auction theory. So as you guys know, for every single order that's placed inside of the market, you have two different types of participants. You have your aggressive participants and you have your passive participants. Aggressive participants are people who are executing the market at a market execution order, so literally just pressing buy or sell. For passive participants are the ones using limit orders, whether they're going to be stop limit orders or they're going to be buy and sell limit orders instead of using buy stops and sell stops. So whenever you see an order triggered in the market, it is going to come up on the footprint chart. And for those of you guys that are trading live accounts, even if you were to just randomly look at a price on the order book, let's say 64.76.25, and you decide, hey, you know what? I want to see if my order will come up on the order book, and you put a limit order, it's going to pop up on the order book, and you will see it pop up on the order book. Now, whenever you're buying a market or selling a market, you're going to have a bid and a ask. What the delta footprint chart is here specifically, it is the net difference between the aggressive buying at the ask and the orders that are executed on the bid. So the net difference is going to be the delta. Now I look at a delta footprint chart. So all of these numbers that you guys see here on the left-hand side are going to be the delta. this is going to be delta by price. So if I were to draw a horizontal line at this price, which is going to be 64.75, the delta at this price is going to be a negative 128, which is also why you can see the volume is in red. But there's a total of 812 contracts traded at this area. Now what this second column is going to be here, it is going to be volume by price. So if price comes up into 64.75 and rejects, and then comes back up and keeps doing like a little bit of a ping pong, and more orders are traded here, you're going to see this number continue to actually increase. Now, depending if those orders are getting filled on the bid or the ask, that will actually change the number on the delta itself. And this is just overall volume color coordinated by delta. So now why this tool is so important is, again, we can confirm strength and we can confirm absorption. What is absorption? It's literally exactly what it sounds like. If you guys were to grab a bowl of water and you guys were to grab a sponge and you were to squeeze that sponge, then place it in the bowl and let go, that sponge is going to absorb all of the water surrounding it until the sponge gets full. Now, absorption in the market is the same exact thing. All absorption in the market simply means is that every time somebody presses buy, there is a limit order to actually take that position on the opposite side, and that position getting filled. Now, what we look for in absorption specifically is for passive participants to continue to absorb the pressure from the aggressive participants. And again, all that simply means is if I buy with 5 contracts, there's somebody on the other side using a limit order and they have 10 contracts placed, not allowing the market to continue to go up to try and simplify it as much as possible. So again, when you see absorption, you see different things along these signs and different things along these areas at your key level of interest, or the areas that you're looking to take the trade from, it'll give you a lot higher of a probability for price to actually move in your favor. So even if you're somebody who trades fair value gaps and you look for absorption inside of that fair value gap to take your entry, a lot of the times you can actually confirm that position and confirm that that is going to be a high quality setup. And if you don't spot any absorption, then that's when you can actually decide to avoid taking the trade. So what does absorption look like in real time? So this is going to be a grade A perfect example of absorption. Now, what I want you guys to do here is I want you guys to actually look at where I'm going to draw these lines in between this, let's call it this 202 delta all the way down into this 139 delta. What can you notice from this entire cluster, which this is going to be called a footprint cluster? What we can notice is this is where the buyers were being most aggressive. And if we look at the context, this is going to be at high of day. And this is also where the majority of volume is being transacted at this candlestick. So what I want you to think about are 2 different things. 1, price is trading at high of day. 2, this is the most volume we see in this entire candlestick. And 3, this is where the buyers are getting the most aggressive. Now, if you're asking yourself, hey, Raul, the buyers are being most aggressive here at the high of day after we took out this high, why is price not going up? And that's the exact divergence that we actually look out for when actually reading a footprint chart to confirm that absorption. If we see that this is where buyers are getting most aggressive at the high of day, but price is failing to break up, what that lets us know is that there's passive sellers, whether it's one institution with a huge, large sell limit order or multiple participants just passively selling the market at that high of day, that's going to confirm that absorption. And once the buying pressure dies down and aggressive selling comes in, that's when you see the actual reversal itself. Now, how can we actually take advantage of this? It's very simple. We need to confirm the absorption first. And again, it doesn't matter what trading strategy you trade. I'm not telling you guys to trade or to change your trading strategy. What I'm telling you guys is you need to implement this footprint chart so you can confirm the actual entry itself. And what that's going to allow you to do is give you the confidence to take the trade before price is even moved in your favor, which again will increase your risk to reward ratios and also increase your win rate, because instead of taking what you thought was an A plus setup, you're actually maybe taking like a B plus setup just simply because of the actual entry itself. So now when it comes down to identifying this absorption, I look for 3 things. 1, who is the aggressor? In this situation, since we're at a high of day, we see that the buyers are being the aggressor here at the high of day. Number 2, above the absorption, because we're looking to short in this situation, I want to see volume die off, and I don't want to see much business being conducted above that area. And all that simply means is I want to see volume die off. Notice how we have a ton of volume being transacted inside of this area here at, let's call it 6474.5. This is where we see the majority of volume being transacted, yet price is failing to break out through this area, and this is where the buyers have been most aggressive. So as soon as you identify that and price starts to come back down and you see aggressive selling coming in, that's when you can actually execute yourself on the trade. Now, what does an entry and a stop loss and a risk reward look like at this, with this type of entry and with this type of move specifically? So in a situation like this, when you actually see all that aggressive buying and you see price start coming down, once we kind of leave this zone where you see that aggressive buying and where volume was picked up, where volume was traded the most, then that's when you actually want to take the entry. That's how I like to take my entries here. So in this situation, I'm going to look to take the entry here at 64.73.5. So at 64.73.5 is where I would fill myself into the market short, with my stop loss right here at the high at 64.75, or at least a tick above the high, because if we actually break through that high, we get above this absorption, then that's really where I'd want to get out of the trade, and I'll cut my loser short for a really small 2 or 3 point loss. And in this situation, if we execute ourselves in the trade at 64.73.5 with the stop loss above the high, what that's going to look like on a time frame chart, it's going to look like this. 64.73.5 is going to be right here. Our stop is going to go just right above that high of day, so we're going to do a stop at 64.75.5, which that stop loss is going to be 6 ticks. Now, there's so many different targets that you could pick. Why? Because look at the R multiple just for us to get back down into this key level of support. That is literally a 3.83 R multiple there alone. Now, if I were to target the low of day, that's going to be an 8 R multiple. And what this also allows you to do is you can even just widen the stop loss a little bit to play it safe. For me, I like to have my stop losses when I take these types of trades be just around 10 ticks. No more than 12, no less than 8. So for me, that's more than enough room for me to actually take these trades, because even if we target this low of day, that's going to give me a 5 R multiple. And again, I just took the trade from an A plus setup. And what this also allows me to do is by the time I'm already floating in profit, I'm floating 2.3 R on the same exact candlestick, I can move my stop loss to break even and manage my trades more aggressively. So every R multiple I'm floating in profit, what I'm starting to see is that I'm gaining and I'm securing my position more and more, moving my stop loss and profit more and more and more. And that is exactly how you guys can actually increase your win rate and also increase your R multiple at the same time. And what that's going to allow you to do is grow and compound your account very quickly, as I have with my $5,000 account. I'm only risking $400 to $500 per trade, and my account's already sitting at $14,000 in 8 trading days. So only risking $400 to $500, I've already made $10,000 taking these same exact trades, because I'm able to get such large R multiples from these setups. And again, you don't have to change your trading strategy. All I'm simply asking you to do is add this tool to your toolbox and your trading arsenal for you to get a lot better with your entries, be more precise, and on top of that, have the confidence to actually take the trades and hold your trades because of the conviction you get. When you only trade price action alone, you're trading delayed data. When you trade order flow, you're trading data in real time, so you're able to make these decisions a lot quicker than a price action trader, because most price action traders would have to wait for entry confirmation. Let's go down to like a 3-minute time frame. A lot of price action traders in this situation wait for some form of an engulfing candlestick. Even if you don't wait for an engulfing candlestick, let's just say you waited for a break of the previous candlestick low to actually take that entry, you would have a 20-tick stop loss, so more than double. And for price to come all the way down into the low of day, that is going to be a 2R multiple. And let me tell you, if you're risking $100 on a trade setup like this, this is the difference between making $530 on this trade compared to $215 on this trade using order flow. And this is a very medium probability type of entry, so it's not always guaranteed to work out more than what it actually works out. So you have probably about a 50% win rate with this type of entry. And again, I'm just here to show you guys what you guys should start implementing as soon as today for you to actually start increasing your win rate and also increasing your R multiple, in turn putting more money in your pocket, and more importantly, giving you the confidence to actually take these types of trades. So I hope you guys did enjoy this video, and I hope to see you guys in the next videos. If you guys want to trade live with me every single day and even get access to my free mini order flow education, make sure to click that first link down in the description, and I'll see you guys in the next one.